Wells Fargo reported earnings this morning, and while they made the earnings number, sales came in light. They missed expectations. As a matter of fact, sales are down about 6% versus last year. We are joined now by the CFO of Wells Fargo, Tim Sloan. He joins us from San Francisco. Tim, great to have you on the show. And I know
nice to be here, Rob.
All right, it's a statement of the obvious, but just walk us through, how is it that Wells Fargo sales revenues are down 6% versus last year when we were starting to think maybe things were getting better?
Well, things are getting better. I think the way that we look at it, Rob, is that our revenues were down about 3.7% from the second quarter. I think it's really important to look at things on a sequential basis. About half of that revenue decline were also in the expense numbers, and so they offset each other. Clearly, it's better to have revenues going up than down. We feel optimistic about revenue growth going forward. I think the important thing is that we were more efficient, and that is our operating leverage increased so that because our expenses were down, and that's why we were able to report record earnings of $4.1 billion and record EPS of 72 cents.
Now, Tim, that may be the case. And by the way, the name's Adam, not Rob, and I'm not going to hold that against you.
Oh, I'm sorry, Adam.
Hey, yeah. It's all good. Net interest margins actually contracted. They were expected to come in over 4%. They're about 3.8%. So explain how, if costs are down, why those net interest margins are coming down and why you can be optimistic.
Sure. When you look at our net interest margin, it declined by about 17 basis points from the second to the third quarter. 12 of the 17 was reflective of the fact that we had terrific deposit growth of over $40 billion from the end of the second to the end of the third quarter, which, again, drove the net interest margin down by about 12 basis points. The rest of it was relatively small. When you look at underlying that, which was why we feel good about net interest income growing, is because we had terrific loan growth. On a gross basis, it was up $13.5 billion. It was across the board in our wholesale, wealth management, and consumer businesses.
Hey, talk to me about your customers. Is it tougher to find good quality credit customers these days?
No, not at all.
So if that's the case, then why are you not growing the revenue base?
Well, we grew our loans this quarter, so that your point about finding good credit customers, margins were down a little bit, no question about it. But again, we saw good loan growth. A lot of that loan growth occurred toward the end of the quarter, which sets us up nicely for the fourth quarter, which is why we're optimistic about revenue.
And how optimistic are you? I mean, do you see this growing sequentially 3-4%, maybe even better? How optimistic are you going into the fourth quarter?
Oh, I don't know exactly what our revenue is going to be for the fourth quarter, but when you think about the fact that we had good loan growth, we had good deposit growth, and the mortgage business pipe is really strong, our pipeline and originations are up, there's a lot of reason to be optimistic.
Any risk that there might be layoffs at the firm?
Well, I think that one of the things that we need to do is we need to make sure that we've got the right number of folks who are facing off every day with our customers and providing them good service. In point of fact, we're actually increasing our employment in the mortgage business because of the growth in originations.
Let me ask you, as we kind of wind up here, is there anything that Washington could be doing that they're not doing right now to help you grow your business responsibly?
No, I think, our job is to focus on growing our business, focusing on our customers, and doing what we can with the rules and regulations that we need to operate in. Clearly, there's been a lot of discussion about financial regulation and whether that's gone too far. Everybody can have an opinion. Our job is to operate under good consumer regulation, good corporate regulation, and make sure that we're providing value to our customers. So we're going to continue to do that.
Okay, great. Tim Sloan, CFO of Wells Fargo. Thanks for joining us from San Francisco. Wells Fargo having a tough day, down 10%, but the CFO, as you just heard, optimistic as he goes into the fourth quarter, you might get a turnaround. They missed on revenues today. All right.